Yeah, good morning, Cornelius.
Good morning, Reverend Dr. Michael John. How are you?
Very fine, Cornelius. How are you? You
Good.
look good.
Oh, thank you. Thank you. Thank you very much for hosting me, by the way. I appreciate it.
Good morning, everyone. It's been a great honor to have Professor Dr. Cornelius Christian at XIBA online for the international webinar. Respected fathers, members of faculty, my dear student friends, and members who are joining us in this webinar, warm greetings to you all. I'm extremely overwhelmed and thankful to our Father Director, Rev.Dr.A.Michael John S.J., and I feel proud to be a part of Sun News and taught by such great teachers whose teaching goes beyond the classroom. And today, that teaching comes from Professor Cornelius Christian, where he is going to highlight on what is money and how India is going to become a superpower soon. Dr. Cornelius Christian completed his graduation in economics from the University of Alberta and an MPhil and DPhil in economics from the University of Oxford. Cornelius has published several noteworthy articles, and his publications have appeared in the Review of Economics and Statistics, Economic Letters, Explorations in Economic History, and the Financial Post. He has presented papers in conferences of top universities of the world, namely University of Saskatoon, Canada, University of Alberta, Edmonton, Canada, and Brock University in the year 2019, and University of Montreal, Canada, Wilfrid Laurier University, Waterloo, Canada, and Northwestern University, Evanston in the year 2018. Presently, he is working on papers COVID-19 in Canada, predictions for the future, and lessons from Asia, along with his father, Dr. Francis Christian, the renowned surgeon in Canada. Economic Shocks and Unrest in French West Asia with James Pensky. Professor Cornelius is an awardee of Brock University for his research initiative in the year 2019 and St. Francis Xavier University Council for Research in the year 2016. After serving in St. Francis University for 2 years, presently he is serving as an Associate Professor of Economics in Brock University, Canada. May I now invite our Father Director, Rev.Dr.A.Michael John S.J., to greet our guest, Professor Cornelius Christian, the speaker of today, with his words. Father, please.
Thank you, madam. Very pleasant morning to all of you, but maybe for Cornelius, it may be night. So I'm happy to see you, Cornelius Christian. Cornelius, the mere word takes me to the biblical terms where Jesus meets with the Cornelius, and there was a change in Cornelius' house, and etc. etc. No, there was a transformation at the personal level and in the society level. Therefore, when I look at you, maybe I remember the same Cornelius whom Jesus met. So therefore, very happy to see you, Cornelius Christian. Of course, when Professor Dr.Rita approached me with regard to this particular exercise or webinar on what is money, so money plays a vital role in today's context. So, but for money, nothing is existing. That is the understanding of everyone's mind. Therefore, I said, okay, go ahead. And a person of your kind is really very nice, and we are really privileged to have you, Cornelius, on this day. Of course, our students 120 are here, or 119, 18 are here, plus some faculty members from other institutes and other colleges. Students are there. So hope they will be able to get something out of your sharing. And it's going to be a sharing based on your experience, the teaching experience at various capacities that you have been in, what Madam has enlisted clearly. Therefore, and I suppose you have also worked in Jesuit universities, you know, that's in Xavier's. I don't know whether it is a Jesuit university or not, but so I hope that St. Xavier's values, St. Xavier's, that pioneering spirit, and how he took youngsters to that portal of knowledge. And I hope that will happen here with our students when they listen to you. So, on behalf of XIBA family, fathers, and of course, rector, principal, secretary, and administrator father, and faculty members of XIBA and students. So I extend a warm welcome to you, Cornelius. So thank you for accepting, and over to you. Definitely, your sharing will enrich all of us. Thank you. God bless you. Thank you, madam.
Thank you, Father. Thank you so much. Thank you for your wonderful greeting, Cornelius. Now over to Cornelius now for his presentation.
Thank you very much, and I hope you can hear me. I hope you can see me. If you can't, then of course I'm sure it'll be alerted. But I'd really like to thank you, Professor Rita Rebekah, for welcoming me and for organizing this, and thank you, Rev.Dr.A.Michael John, for your warm welcome. Thank you both, and thank you to the administration and to the faculty of Xavier Institute of Business Administration for hosting me virtually. And it's my pleasure to be with you this morning, all the faculty members, all the students, and anyone else who happens to be here. And thank you to anyone else who I may have forgotten to mention. Just thank you all for being here. I really appreciate it. So I'm going to share my screen, and you will see the topic of my talk, and you'll see my slides. So hopefully you can see this.
Yes.
The topic of my talk. You can see this? Okay, great. The topic of my talk, What is Money?, comes at a crucial time. Over the past year, geopolitical tensions between the West and the East have risen, and I believe this will give rise to a new system of money, a new monetary system in which the US dollar will be dethroned as a world reserve currency, and gold will play a prominent role. Understanding what is money, therefore, has never been more important. And I believe personally that India stands to gain tremendously from this new reset of monetary conditions globally. Before I begin, I'd like to credit the following people from whom I have taken some of my ideas. It's actually not a professor or an academic. It's a Canadian billionaire by the name of Frank Giustra, who was the first to point, to my knowledge, to a bifurcation in the global monetary system. And he did that over a decade ago. And others since then have expanded on his thesis. Andy Schechtman of Miles Franklin Precious Metals, Matthew Piepenburg of Matterhorn Asset Management, and Willem Middelkoop of the Commodity Discovery Fund, to name a few. I can also think of John Butler, who is a financial historian. What seemed like a far-fetched forecast a decade ago, the idea that the US dollar would be dethroned, a decade ago, that seemed unlikely, but now it seems almost certain today. I ask young people today, and I ask them the question, do you think that the United States will be in the same position globally as a superpower in 10 years that it is today? And without a question, they all answer no. They all tell me that. So that's my prediction. The United States dollar will cease to be the global reserve currency by 2030. Why 2030? I'll tell you why in a minute, but essentially what's going to replace it, I believe, is going to be a gold-backed BRICS currency. And we'll get to all of these different pieces of the puzzle and how they fit together throughout the course of this presentation. So this is the US dollar. This is actually a map of the US dollar, and you can see here that the US dollar has lost a tremendous amount of its purchasing power since 1913. Since 1913, the US dollar has lost 97% of its purchasing power. In other words, 97% of what you could buy in 1913 with $1, it's gone. It's gone. You can't buy it anymore. The purchasing power of the US dollar has diminished radically over the past 100 and so years, over the past century. That's kind of a prelude to what I'm talking about. But let's go on and talk, let me just lay out my presentation for you. I have 4 key points that I would like to make. First of all, I'd like to bring up the definition of money, because really understanding what's going on here requires us to go back to the textbook definition of money that you guys have in your economics textbooks, for example. The second thing we're going to do is we're going to talk a little bit about monetary history, and we're going to talk about the United States. We're going to talk about how the current monetary system evolved. Then we'll get straight to my thesis of a global monetary reset, and finally we'll end with some conclusions. So all of you probably in your textbooks, in your economics textbooks, when you open your economics textbooks, maybe when you were doing your undergraduate degree, or even in high school, you learned that money has 3 functions. Money is a medium of exchange, it is a unit of account, and it is a store of value. So what does this mean? A medium of exchange means that I can exchange money for goods and services. I can go to the shop and I can buy groceries. I can go to the gas station and I can fill up my car with petroleum. That's the first role of money. The second role of money is that it acts as a unit of account. It allows me to compare prices for different goods and services. So the prices that you see posted at a grocery store or at a convenience store are the other attribute of money, shall we call it. And the third and final role of money is as a store of value. I want you to keep this role in mind throughout the presentation. The other roles are kind of obvious, but it's not clear, the store of value function anyway, how this really serves a purpose. And we'll talk about that in a minute. You also learn in your textbooks that there's 2 types of money. You learn that there's fiat money and you learn that there's commodity money. So fiat money is money that has no intrinsic value. It's paper or it's digital. It can be printed, essentially. Fiat money is things like the US dollar, the Indian rupee, the Chinese yuan, Russian rubles, etc. In fact, every country today operates on the basis of fiat currency, money that has no underlying value. The second type of money is commodity money. This is money that has intrinsic value. So for example, gold. Gold would be an example of commodity money, or money that is backed by gold or backed by silver or backed by some other basket of commodities, if you like. Money that has intrinsic value, money that can actually be used for things other than its use as money. So there's 2 types of money, fiat money and commodity money. Let's talk about a type of fiat money that I assume this audience is well acquainted with, and that is the Indian rupee. The Indian rupee, of course, if you look at the past 10 years, inflation in India averaged 6% per year over the last decade. So for each year that you take over the course of the last decade, inflation, that is the rate at which prices are rising, was about 6% per year over the past decade. What does that mean? If you hold your wealth in cash, how quickly does the purchasing power of that wealth erode? How quickly does it disintegrate? This means that if you just have cash savings in 12 years, you would lose half the value of your wealth. You would lose half of your wealth if you just held it in cash. And in fact, Indians know this quite well. This is why Indians, it's a cultural thing. We tend to save in gold and we tend to save in precious metals like silver and other types of methods of savings like real estate, for example, because we know that money as by itself, loses value over time. Fiat money loses value over time. In other words, fiat money is not truly, if you go back to the definition of money, it's not truly money, because money has to have a store of value function. The US dollar, the Canadian dollar, the Russian ruble, the Indian rupee, the Chinese yuan, none of these can be classified, according to the textbook definition, the original textbook definition, none of these can be properly classified as money. So what is money? Gold. gold has always operated as money. In fact, here I've got some pictures for you. On the right-hand side, you can see the oldest example of gold being used in a society. This is 6,000 years ago in Bulgaria. They uncovered these golden kind of, I suppose, statuettes or little miniatures. They uncovered these are from 6,000 years ago in Varna. The value of gold has always been present throughout different societies, whether we're talking about India, whether we're talking about Mesopotamia. We can go to the Aztec Empire. Throughout time, throughout history, the Roman Empire. Gold has always been valued as money. So on the right-hand side, I have gold from Varna in Bulgaria from 6,000 years ago. On the top right-hand side, with these two sides of these coins, I hope you can see it. This is the Roman solidus, I should say. So this is the Roman solidus. This was used as money in ancient Rome about 2,000 years ago. And right below it is the King George sovereign. I don't know if anybody of you have seen this. Some of them are actually, many of them actually are floating around in India still. This King George sovereign was supposed to be around 1 troy ounce of gold, solid gold. And that was used as money up until 1913 across the British Empire. So gold's purchasing value remains constant. That's why it's money. It can be used as a medium of exchange. It can be used as a unit of account, and it is a store of value. And let me give you just one example. A tailored suit, a man's tailored suit. In ancient Rome, 2,000 years ago, 1 ounce of gold could buy a man a tailored tunic, right? That's the version of the suit that they wore. You could see these wonderful senators and equestrians wearing these beautiful suits in ancient Rome in these paintings and on these wall statues and so on. That was 1 ounce of solid gold. If you gave the tailor 1 ounce of gold or 7 solidi, he could get you a tailored tunic. In 1913, fast forward about 1900 years, 1 ounce of gold could buy a man a tailored suit in the United States. In 2023, 1 ounce of gold can still buy you a tailored suit. It can be traded for about $1,850 US, and it can buy you a tailored suit. Imagine that, over 2,000 years, and this is just one example, gold has a long-term effect as an inflation hedge. It operates as an inflation hedge over a long period of time. Its value does not change over a long period of time. And that's part of the reason that gold has been used as money. But there are other reasons that allow us to favor gold throughout different cultures and throughout different periods of time as money. Number one, gold is impossible to destroy. It's chemically stable. If you drop a nuclear bomb on it, I don't know, maybe you could destroy gold, but otherwise it's impossible to destroy. You can fragment it, you can shatter it into different pieces, but then you can put those pieces back together again. You can't really destroy the underlying element. The second thing that allows gold to be very favorable in use is that it is impossible to create in a lab. Alchemists, there used to be this discipline called alchemy, which a lot of magicians and occultists were involved in. They tried for thousands of years to create gold in a laboratory, and they failed. Can gold be created from an atomic reaction? Maybe, but then, it's very expensive to create, right? So it's pretty much impossible to synthesize or to create gold. The third reason gold is very valuable is because it is scarce and very difficult to mine. You have to actually, nowadays, it's even more difficult than it was way in the past. You have to actually do open pit mining or various other types of mining that's very expensive. And, now with permits and everything, it can take 10 years to go from purchasing a mine to getting it into production. The fourth and fifth reasons why we like gold is because gold is malleable. You can change it into different forms, and it's divisible. You can break it apart, and you can use it in smaller transactions as well. So that's the reason that gold has always maintained its value as money and why it's always maintained its value as a store of value. Just to give you an idea of the scarcity of gold, if you take all of the gold that has ever been mined in history, it will fill the entirety of just an Olympic-sized swimming pool, which if you think about it, Olympic-sized swimming pools are big, But compared to other metals like copper or aluminum, gold is extremely scarce. The entirety of gold mine only fills an Olympic-sized swimming pool. That's pretty impressive. Most importantly, gold cannot be printed. Cash can be printed. If it's electronic, the government or the central bank can go onto their computers and increase the balances of the private banks. Gold, you cannot do that easily with. You can't really print gold. You have to go out and mine it, right? And this is another reason that it is operated as a store of value. Until 1913, so now we're getting into the monetary history. We've gone past the definition of what is money. Now we're getting into the monetary history. Until 1913, if you went to a bank in the United States of America with a $20 bill and you told them, I want gold, they would have to give it to you by law. If you went to a government exchange office and you asked them, I would like some gold, here's my $20 bill, give it to me, they would have to give it to you by law. In fact, if you look at this $20 bill, right underneath the picture of George Washington, you can see it says in gold coin. So 1 ounce of solid gold would have to be provided if the person who holds that $20 bill demanded it. 1 ounce of solid gold would have to be. What does this mean? This means that banks and the government, including the central bank, if there is one, have to keep enough gold in their vaults to be able to satisfy the demands of customers who might want gold at a moment's notice. This severely constricts the ability of governments and even private banks from issuing loans or increasing the money supply. In other words, the money supply generally stays stable. And what do we know? If the money supply generally stays stable, prices will tend to be stable as well. In fact, that's precisely what happened underneath the gold standard. This is some data here. If you look at this, this is the price level. This is the consumer price index from 1840 to 1895. It's a measurement of the average price of goods and services across the United States. What you'll notice is that from about 1840 to 1861, prices were pretty much flat. Then in 1861, I don't know if anybody knows what happens, if anybody knows their US history, the US enters into the Civil War, right? The South and the North, Abraham Lincoln, Jefferson Davis, Lee and Grant, they enter into the Civil War for 4 years, and the United States prints money so that it can buy weapons, it can buy ships, it can buy equipment, it can, increase the capacity of the army. These are the reasons why in 1861, from 1861 to about 1865, prices take off drastically, because the United States went off the gold standard temporarily, and you can see exactly what happens. This is actually a very nice experiment. It shows you what happens when you have a gold standard and when you go off the gold standard to fight a war. Now, after the Civil War, the United States went back on the gold standard, and look at what happens to the price level. It goes back to where it was before. Again, gold is a long-term store of value because the currency was backed by gold. Every note in circulation was backed by gold until 1913. Now, the United States went off the gold standard in 1913, and the scope of this talk doesn't allow me to actually discuss the reasons why, although if you have questions about it, we can discuss that during the question period, possibly. But the United States did go off the gold standard in 1913. Incidentally, this had nothing to do with World War I. World War I started in 1914, and the United States didn't enter into World War I until 1917, much later. It had more to do with the formation of the Federal Reserve System in the United States, the current Fed, as you might call it. Some of you might know about this. It's basically the equivalent of the Reserve Bank of India, but for the United States. After World War I was over, and all of these countries had finished fighting the war, and all of these countries, incidentally, had gotten off the gold standard, the United States decided to resume its peg of the currency to gold in 1922. It went back on the gold standard, but then the Great Depression happened in 1929. Franklin Delano Roosevelt was elected as president. He actually confiscated people's private gold holdings. Imagine, can you imagine this? Like, if people who held more than 4 ounces of gold could be subject to fines and jail time at that time. And so he confiscated people's gold, and he ended the gold standard in 1933. Imagine if that were to happen in China or India. I mean, there would be a big outrage at that point, right? I mean, it would not go down very well, but in America, unfortunately, this happened. And of course, they ended the gold standard in 1933. Now, despite the fact that they had ended the gold standard, the United States was in a prime economic position after World War I and continued to be so until the onset of World War II in 1939. As you can see here, this basically is the GDP or the economic size of the various countries and jurisdictions across the world. And you can see that the United States balloons beyond all of them, including the USSR and China and other big countries like the UK. After the war, incidentally, after the World War II, that is, Europe was even more decimated. The Soviet Union was even more decimated, and even China had been decimated by Japan's invasions. The United States remained, except for Pearl Harbor, untouched by the war domestically. Its industrial base was still intact. Its factories were still intact. Its ships were still intact. Its merchant marine was still intact for the most part. The United States' share of global GDP after World War II was 50%. In other words, 1/2 of the global economy was in the United States after World War II, immediately after World War II. So let's backtrack a little bit. 1944. Everybody realizes at this point that the Allies, that is Britain, France, and the United States, and so on, and they are going to win World War II. What's going to happen after the war? How are we going to arrange things? Well, we are going to arrange things using a gold standard again, but it's going to be a little bit different. So in 1944, all of the Allied powers met in New Hampshire at a place called Bretton Woods. Very fancy place. It's still there. And they hammered out something called the Bretton Woods system, which was in place from 1945 until 1971. What is the Bretton Woods system? The Bretton Woods system, at this point, a little bit of context is required. During World War II, the United Kingdom, France, and various other countries that were fighting on the side of the Allies sent all of their gold to the United States for safekeeping. So after World War II, the United States had a bunch of gold in its vaults. Plus, the US was the biggest economy in the world. So it was decided that the US dollar would basically determine the global monetary system. It would just be easier at that point. The US dollar was fixed at $35 per ounce of gold. So there was gold interchangeability between countries. Every other currency was fixed to the US dollar. So if you, for example, £1 for a long period of time was equal to $2.80, and 30 Greek drachmas always equaled $1. The exchange rates were fixed. So that means that if you were an American and you wanted to go on a vacation to France or to Germany, you had to get permission from the bank and from the government by extension to withdraw British pounds or to withdraw French francs or Italian lira if you wanted to go on vacation, because if you had a huge withdrawal of foreign currency, that could really upset the exchange rates, right? And so that the government didn't want that. Things were very regulated back then. Going on vacation, you had to plan that 2 weeks in advance. You couldn't just hop on a plane and go to England or to India or to China. It was not possible at that time. The institution that was created from the Bretton Woods system to manage this entire complexity was the International Monetary Fund, the IMF. You probably know about it, right? The IMF is pretty famous, and it's still there today, even though the Bretton Woods system is not. However, the Bretton Woods system only worked as long as the United States had the discipline to not increase its money supply beyond the availability of gold in its vaults. And unfortunately, the United States did. Remember, the price of gold was pegged at $35 per ounce. That means that any other country, whether it's France or Germany or the UK or Italy, they could ask for their US dollars to be exchanged for an equivalent amount of gold. So if they have US dollar reserves in France, they could say, hey, we want our gold. We want our gold back. And unfortunately, the US government kept printing money to pay for government programs. This is Lyndon B. Johnson, and he signed the Great Society programs. Now, these were programs with a good intention. Ostensibly, they were intended to help poor people and to help people in poverty in the United States. It's kind of remarkable to think that the US had poverty in the 1960s, but it did to some extent. And so these social welfare programs, they had to be paid, but Lyndon Johnson was not willing to raise taxes. So, of course, what happens when you don't raise taxes? You end up either defaulting or you print money. And printing money seemed like the appropriate option. The other big thing, of course, as you can see in these images, is the Vietnam War. The United States entered into a war against North Vietnam on the side of a fellow by the name of Jim, and that required a lot of money to pay for as well. So the government paid a lot of money. Eventually, Charles de Gaulle, the president of France, decided to call the United States' bluff and demand all of France's demand that the United States redeem his US dollars for gold. In other words, Charles de Gaulle said, "Give me back my gold." Now, this would have caused a huge incident, and of course, eventually it settled down, but the US realized that it didn't have the ability to back the dollar by gold anymore. There were too few gold bars, and it would have had to either revalue the dollar, which would have caused a loss in confidence in the US dollar, or it would have to go off the gold standard. And that's exactly what it did. In 1971, President Nixon announced on the radio, I believe, that the United States was temporarily suspending its redeemability of gold for the US dollar. Temporarily. Of course, temporary is now about 50 years' time. So we still don't have convertibility of gold for US dollars. This is history. And of course, after this happens, as you can see here, I don't know if you can see this chart very well, but it shows the various currencies priced in gold. The black currency is the black line on the top is the Swiss franc, and the dotted line at the bottom is the US dollar, and then there's another dotted line that shows the British pound, and then the gray line is the Japanese yen. So as you can see, after 1971, where I've drawn a line there, after 1971, the value of these currencies drops like crazy. Because why? They're no longer priced in gold anymore. The other thing that happens, if you look at the bottom chart, I don't know if you can see it, this is the price of a barrel of oil in US dollars. Now, prior to 1971, because of gold convertibility and because oil markets were relatively stable and geopolitically secure, the United States had stable oil prices, as you can see by this black line. The black line is the US dollar. After 1971, the price of oil goes up like crazy, as you can see here. The price of a barrel of oil goes up. It keeps fluctuating. Now, I mean, the price of a barrel of oil is around, I think, $80, right? So, and oil is priced in US dollars, which we'll get to in a minute. But the price of oil in gold, and I don't know if you can see that little gray line at the bottom chart there, the price of oil in gold has always remained the same. It always takes the same amount of ounces to purchase a barrel of oil in gold as it has from 1860. Again, gold maintains its value. So how would the United States at this point convince others that the US dollar is still valuable? They've gone off the gold standard, right? And now the US dollar is not pegged to gold anymore. So how are they going to convince the world that the US dollar is still valuable? Enter Saudi Arabia. In 1974, President Nixon flies to Saudi Arabia to meet with Prince Faisal, and I believe Henry Kissinger accompanies them. Prince Faisal of Saudi Arabia and President Nixon of America signed in 1974 a milestone agreement. The agreement goes as follows. Saudi Arabia, at this point, was a member of OPEC. It was a founding member of OPEC, which gave Saudi Arabia a huge amount of sway in global oil markets. The deal was this, according to President Nixon and Prince Faisal. All of Saudi Arabia's oil from 1974 would have to be priced in US dollars and Saudi Arabia would only accept US dollars for oil. Only US dollars. What does Saudi Arabia get in return for this? Saudi Arabia gets US military support and US military largesse. I mean, from 1974 until the present, the United States has pretty much unconditionally supported the Saudis in all of their military endeavors. That was the agreement. And as a result, the petrodollar system is formed. Nowadays, all oil, pretty much all over the world, but 95, 96% of the oil that you buy in the world is priced in US dollars. And it all stems from this 1974 milestone agreement, because Saudi Arabia, as a founding member of OPEC, is able to pull the hairs of the other OPEC members and make them agree to this. Once everybody starts buying from Saudi Arabia in US dollars, everybody buys oil in US dollars. That is basically what underlies the petrodollar system and allows the United States to keep the US dollar maintaining its value. In other words, the US dollar maintains its value by military force. US military bases worldwide, there are 750 of them. Now, of course, as you can see, I don't know if anybody of you know your geography very well and can see Saudi Arabia there, but there's tons of military bases in Saudi Arabia, across Africa and Latin America, and even across Europe and Japan. What is the purpose of these military bases? You could say it's to protect various US allies. There is an underlying threat as well from these military bases. If you try to go off the US dollar, see what happens. See what happens. The US military can potentially invade you, or they can do something to you that would compromise your national sovereignty. That's the underlying threat. And that's what has kept the US dollar being used as a global reserve currency up until today. Most international trade is conducted in US dollars. The vast majority of trade is conducted in US dollars. But then something happened. Oh, before we get to that, these are treasuries held by the various countries, US treasuries held by oil exporters. As you can see, Saudi Arabia holds around $125 billion in US bonds. In other words, they hold American debt. So, and why do they hold American debt? Because America offers them protection, and they buy Saudi oil. Saudi Arabia, UAE, and actually Saudi Arabia is one of the biggest holders of American government debt. And you can see this here. This is kind of a very illustrative chart, excuse me, to show the petrodollar system. So since 1974, oil has always been priced in US dollars, but that will soon change. And once that changes, I believe that everything will fall apart and you will get a bifurcation in the global monetary system. The US dollar will cease to be used as the global go-to reserve currency. And that's because of the rise of the BRICS. The BRICS nations is an alliance between 5 countries: Brazil, Russia, India, China, and South Africa. Collectively, these countries represent about more than half of global GDP. They represent 40% of the world's gold supplies, and they represent a large percentage of raw minerals and raw natural resources like oil. These countries collectively are very powerful, and they can mount a challenge to the United States. So the BRICS countries, originally it was 4. It was originally Brazil, Russia, India, and China, but South Africa joined soon after. The first BRICS summit was held in Yekaterinburg in Russia. And as you can see there, Manmohan Singh was there, the former Prime Minister of India, Dmitry Medvedev, Lula Silva, the former president of the Chinese Communist Party was there as well. And that's when they had an informal meeting. And that's the first kind of thing for the BRICS. And the BRICS, by the way, they've always discussed since 2009 the idea of creating an alternative to the US dollar for international trade, so that they can challenge the United States as an economic bloc, as an economic group. But those discussions have recently accelerated in 2022. What happened in 2022? Russia's special military operation in Ukraine. Now, it's not because of Russia's military operations in Ukraine that anything necessarily happened, but the US's reaction and NATO's reaction and the West's reaction to what Russia did is what is important for us here. Because what did the US do following Russia's operation in Ukraine? In March,
Cornelius.
I think I'm getting some noise here. Anyway, I'll continue. The US dollar was weaponized against Russia. In March of 2022, Russia was banned from the global SWIFT payment system. So Russians working in the United States or Russians working in Europe found it very hard to send remittances, to send money back to their relatives in Russia. It was impossible. It was impossible if you were a businessman who wanted to do business with Russia, because now Russian banks were banned from international payments in most countries. Also in March, the US and its allies froze $300 billion in Russian foreign reserves. Can you imagine it? By the way, Switzerland also did this. And this is in some ways a first time for Switzerland, because Switzerland has always been known to be neutral in these kinds of conflicts. And Russian individuals and companies were limited from doing business in US dollars. So if you were a Russian businessman, it would be very hard for you to conduct trade in US dollars. The intent of this was to cripple the Russian economy, but that didn't happen because of the BRICS. Now, of course, I should also mention, according to Seymour Hersh, the US also attacked Nord Stream, which is a Russian natural gas pipeline. And this has also precipitated a decrease in relations between the West and the East. So in 2022, in the BRICS summit, you had Vladimir Putin and you had President Xi and, of course, Modi as well. You had all of these different countries come together. And for the first time, they committed to creating an alternative reserve currency to the US dollar. The BRICS are now developing a new basket-based reserve currency, and gold is likely to play a significant role in this basket. That was in 2022. Why is that the case? Because now, if any country, I mean, now China is looking at the United States and thinking, we could be next. Russia was banned from the international payment system. The US dollar was weaponized against Russia. We could be next. India is thinking the same thing. India could be next, and the US could make up whatever reason it wants, right? It doesn't like India's, it doesn't like Modi. It doesn't like, maybe it doesn't like the Chinese Communist Party, or, any kind of reason can be used to weaponize the US dollar in an ad hoc way, like it was done with Russia. At least that's the perception. And there's this kind of perception of a hypocrisy of the US dollar when, when, of course, and this is not my opinion necessarily, this is just the opinion of the BRICS countries, when the US is able to invade other countries and conduct various kinds of wars across the world, and when Russia is conducting a special military operation on its doorstep, then Russia has to be excluded from doing any kind of business globally. So that's kind of the hypocrisy, the perceived hypocrisy, I should say, that the BRICS countries see. And now the move to get off the US dollar has accelerated. Turkey, Egypt, Iran, and Saudi Arabia are considering joining the BRICS now. Saudi Arabia has applied to join the BRICS. And this August, the BRICS' agenda, according to Sergei Lavrov, the Russian foreign minister, includes the development of this new basket-based reserve currency, which will likely be backed by gold. Saudi Arabia last year in 2022 publicly announced that they are open to accepting Chinese yuan in exchange for their oil. If they do this, the entire US petrodollar system could crumble. Think about that. Another key data point is that in 2022, last year, central bank gold purchases were at a record high from 1950 to 2023. 1950 is the first date that data was collected, but the net purchases by central banks was around 1,200 tons of gold. That's 1/3 of the mined supply of gold yearly. That is a huge amount of gold. Central banks are buying gold like crazy, basically. And part of this is the geopolitical tensions that have been unleashed following the West and following NATO's response to Russia's special military operation in the Ukraine. So that's kind of the broad-based thing. And it could be that a lot of these banks, China, by the way, was the biggest buyer of gold last year. It could be a lot of these countries are preparing to unleash a new reserve currency backed by gold. And that's why they're buying so much gold. It's very possible. So this is my forecast, and this is where we get to the global monetary reset. The BRICS countries, I believe, will develop a gold-backed reserve currency. I don't think that they will use a reserve currency that is a basket of their various currencies. They don't trust each other. Brazil, Russia, India, China, South Africa, they don't trust each other, right? There's sometimes tensions between India and China. There's sometimes tensions between South Africa and Brazil. The only thing that unites them is their opposition to the perceived hypocrisy of the West and the perceived hypocrisy of the US dollar. That's the thing that really unites the BRICS countries together. Gold is trustless. You don't have to trust another country's central bank to maintain the value of gold. That's why I believe a gold-backed reserve currency will develop. And the second thing that'll happen is a bifurcated global monetary system will occur. You'll have the US dollar being used mostly in Western countries like Canada, the United States, Australia, Europe, and you'll have a BRICS reserve currency being used in the East. You'll have it being used in India and China and Brazil and so on. The BRICS reserve currency will be backed by gold, and they'll be using that to trade goods and services between each other. What will happen then is that as people realize that they don't need US dollars to conduct international trade, all of those US dollars will be sent back to the United States, and that will cause higher inflation in the US. All of this, I believe, will happen by 2030. Why do I say it'll happen by 2030? Because the NATO response to the Russia-Ukraine conflict has hastened the BRICS' actions. They are very worried that the United States will use any kind of perceived political opportunity to block, let's say, China or India or South Africa from the global monetary system like they did with Russia. Now, Russia has been okay because they've managed to trade with India and they've managed to trade with China and their BRICS allies, but it could happen, right? And if it happens to India or China, then they want to be ready with their own basket reserve currency. The US and its Western allies, and I know this might surprise some people because you look at the West and you look at the United States and you perceive it to be very rich, right? And you perceive it to be very wealthy. But the truth of the matter is that the US is on an economic, demographic, social, and political decline. Economic decline because secular stagnation has set in. It is very unlikely that US economic growth annually, will ever exceed 2% for a sustained period of time. Look at it. India's economic growth, even during the COVID lockdowns, was around 6%, right? India is in a much stronger position compared to the United States. Demographically, the US is losing its population. People are not birthing enough children to replace the workforce. If you can't replace the workforce, then of course you're going to have demographic problems where you have a smaller amount of young people looking after a huge population of elderly. So demographically, actually India is quite a lot more advanced than the United States and quite a lot more advanced than Europe. And by the way, Europe, Canada, all of these Western countries have this demographic problem. They're not making enough babies to replace the workers in the future. Social problems and political problems. There is a growing divide between different groups in the United States and in Canada and in Australia. And you might not see it, but it's happening and it's manifesting itself in growingly divisive politics, which makes political consensus a lot more difficult. So for these reasons, the US and its allies are on a secular decline, and the West is moving. The real problem, the other big thing in the West, is that they are moving towards green energy too quickly. They're moving towards solar, they're moving towards wind power, towards nuclear, but they're doing it in a manner that is way too fast. Number one, because you're not going to be able to, and some of these governments have actually 2030 plans. By 2030, all of these governments basically want to be carbon neutral. I don't think it's possible, especially if you look at a country like Canada, which has a lot of space and which is extremely cold in the winter. We're talking about minus 20 degrees Celsius weather. Solar, wind are not going to be able to sustain or replace any kind of conventional energy sources. The second thing that is really problematic about this plan is that it alerts countries like Saudi Arabia that, hey, they don't want us anymore. We might as well make up a backup plan and join the BRICS countries. So that's why I think it'll happen by 2030. Why do I think India will benefit from this? Because India has economic advantages. It's growing. It has demographic advantages. I recently read an article that Apple is looking to expand its operations in India, its factory operations in India, following kind of geopolitical instability that it's had in other countries that it's been operating in. So India stands, I think, to gain. And I think one of the most important factors is demographics, quite frankly. India also has a lot of gold, and Indians understand the value of gold. So what will be the catalyst for this de-dollarization? Once Saudi Arabia, or once OPEC decides that it no longer needs to accept US dollars for international trade, I think the entire domino, the entire house of cards, rather, will fall apart. And you'll get a bifurcated monetary system with the West using the US dollar and the East using the BRICS reserve currency, which will be backed by gold. That's what I think will happen. That's, of course, my opinion. That's my forecast. And you'll feel free to critic. Now, that doesn't mean, of course, that there's going to be two separate blocks that don't trade with each other. It could be that the East, when they trade with the United States, will use US dollars. And it could be that the US is going to use the BRICS reserve currency to trade with the East, excuse me. But ultimately, there's going to be a bifurcated monetary system. Now, why does this matter to you? And I put this photograph. I don't know if anybody knows this movie. One of my favorite movies, The Dark Knight, starring Christian Bale. It's just the Joker burning a bunch of cash, really fiat money. It's important for portfolio allocation. You guys are in business. You're probably taught a little bit about portfolio allocation, about investing. The US dollar is viewed as a safe haven asset. Last year in 2022, when there was geopolitical tension, when there was financial tension, when nobody knew what the Federal Reserve was doing, everybody just bought US dollars. And the US dollar index went up like crazy. That's never going to be the case again. The US dollar is not going to be viewed as a safe haven asset. It's going to be the BRICS reserve currency, because the BRICS reserve currency is going to be backed by something that always maintains its value, and that thing is gold. Number two, investors are going to shift capital to alternative assets like the BRICS currency. They're going to shift to gold, to real commodities, and they're going to shift to investments in BRICS nations. Why purchase property in the United States when the property market has probably peaked at this point, when you can purchase property in India, when you can purchase property in Brazil, for example, where you can purchase mining companies in South Africa, when you can purchase oil companies in Russia? That's what's going to happen. Portfolios will have to become, in other words, more international so that they can mitigate against any kind of risk that might happen. We have portfolios now in which companies just invest in US stocks, US equities, or US bonds. Right? There's kind of a 60-40 portfolio where it's just United States. That has to change in the future as the global monetary system becomes bifurcated, as it separates into these two blocks. The second reason it matters to you is because English is considered a lingua franca. In other words, it is the language of business. No matter where you go, you're expected to speak English to conduct business operations. If you go to Japan, if you go to India, if you go even to China, ultimately they will get a translator, but English is considered the lingua franca. Not anymore. Someone who can speak Chinese or Hindi or Russian will become much more valued, or Tamil will be much more valued in the future compared to somebody who can't. And workers who understand cultural norms in the East will be prized. The Western culture is very different from the Eastern culture, right? For example, I understand that, I mean, in Indian culture, you don't wish somebody happy birthday before it's their birthday, right? Or after it's their birthday, whereas in the West you might. And these are little things, but ultimately they add up to kind of frictions that make business much more difficult to conduct if you don't understand the cultural norms. If you don't understand cultural norms in Japan, for example, it's going to be very difficult for you to conduct business in Japan. So in conclusion, throughout history, empires have risen and they've fallen, and they've had fiat currencies and they've had commodity money. There's only two types of currency throughout history: currency that is backed by something real, like gold or silver, and currency that is backed by nothing except the law. The government mandates that you have to use that currency, like the rupee, right? Those are the only two cases in history for currencies. Now, as you have an ascendant empire like the United States or the Roman Empire, going back very far in history, that empire has used sound money. They've used cash, they used currency that is backed by gold. As that empire starts to grow and becomes the dominant world superpower, it decides to abandon that currency. It decides to abandon gold, and it decides that it is going to print money endlessly to maintain its standard of living, and perhaps even try to go beyond it in an exhibition of hubris, if you like. That happened to the Roman Empire. The Roman Empire decided to devalue the solidas and the denarii. They decided to devalue the gold content in their coins, and you got hyperinflation in the Roman Empire, and you eventually get the collapse of the Roman Empire. In America, you've had extremely loose monetary policy over the past decade, especially since 2008. But last year, about twice, or over the past 3 years, twice of the US dollars ever created were created over the past 3 years. It's insane. These suggest that the US dollar will, if not eventually fail, it'll lead to a bifurcation of the monetary system, and it'll happen by 2030. Ultimately, empires have to rise and they have to fall, and the United States will have to do so as well. And ultimately, it all comes back to economics. So I'd like to thank you once again for listening to me. I appreciate it, and I'm happy to take any questions you might have at this juncture. Thank you.
Thank you, Professor Cornelius.
Thank you.
Now I would request the students to raise some questions if you have any. Yes. The students can come near the laptop and raise the questions. The students can make use of the facilitator, Mr. Nathan sir, to enable them to raise questions. Second MBA students from the conference hall, do you have any questions?
Yeah.
Dr. Cornelius, so what is the power play played by the different countries with regard to the economic standards? How do you see the power play that is really disturbing the growth of every country's economic standard?
In the West, or?
Yeah.
What do you mean by power play? Let me ask you that first.
Yeah, it's a power play in the sense how the a country taking their own credit or whatever may be. So the power play, maybe the leadership that is portrayed by different countries. So what's happening now? You have been sharing about the Ukraine war and etc. etc. So how does that disturb the growth of economic standards?
Oh, in the West. Well, I think there's a couple of things here. I mean, ultimately, this is a geopolitics question, and I can't really, I'm not going to go into the geopolitics per se, but I think that the West made a huge error in sanctioning Russia for its operations in the Ukraine. I don't think that Ukraine has any necessarily strategic merit to the United States or to Europe. I think it was just a power play by NATO to try to maintain its dominance in Eastern Europe and ultimately try to put Russia down. Now that's a long discussion, and I think if anybody wants a really good explanation of it, I would suggest they listen to a fellow by the name of John Mearsheimer, who's, I believe, a University of Chicago professor of political science. He has a wonderful analysis of it. But ultimately, NATO, when the Soviet Union fell, it was promised that that NATO would not advance 1 inch east of essentially of Germany. But however, as soon as the Soviet Union fell, NATO started to include Poland, and it started to include Lithuania and a number of former Eastern Bloc countries, and so. When this conflict happened in Ukraine, Ukraine is not a NATO member. It's not a European Union country. It's also a relatively poor country, at least by European standards. So the only reason I can think of that they would have sanctioned Russia is because there was a need, perhaps, and perhaps there was a perception that Russia and the BRICS countries were in fact becoming more dominant economically, and there had to be ultimately a conflict. There is a theory called a Thucydides trap, and this goes back to Thucydides, who wrote it on the Peloponnesian War, and he said when you have a dominant power and you have a rising superpower like China or Russia, eventually they're going to have to face off in some kind of a conflict because the dominant superpower is not going to give up its dominance super easily. So that could be happening here. But to be quite frank, I would suggest people listen to John Mearsheimer if they want a more full understanding of the power plays and dynamics here, because he is very good. I think he's very balanced, at least as far as American commentators tend to be, because it's hard to find balance in the discussion, especially now. But Mearsheimer, Mearsheimer. I hope that answers it.
Thank you. Yeah, students, any clarification or any queries that you have on Cornelius sharing, please feel free.
Good morning, Professor Cornelius. I have a small doubt, and I would like to clarify this. As you were predicting, your own understanding or your own ideas about how the economy is going to be or how things are going to work out in the future, I was just foreseeing a Cold War or a possible third world war, which would cause because of the friction between the West and the East. It would not just lead into a bifurcation of the currency system, but it would also lead into a bifurcation of the ideologies, and then things might turn upside down. So that is the thing that I personally foresee in my mind with regard to this war that is going on. And the next thing that I would like to clarify from you is with regard to the stand of the current political system in US with regard to with regard to this this underlying debate, and how will it affect the future power or the future political system, which is going to soon take place in a year or two. So how is it going to have an impact on all these things, or will the future power decide on all these things as their agenda for the next regime? Thank you, Professor.
Thank you. That's a great question. I appreciate it. I really hope there's no World War III kind of situation or Cold War. I do think that everyone I talk to who knows something about geopolitics, and I don't claim to be an expert on geopolitics, but I do talk to people who are experts in that domain. They do tell me that we are closer to World War III than they've ever imagined, at least since the time of the Cuban Missile Crisis, because now, especially with the West sending tanks and sending potentially airplanes to Ukraine, things could get very messy very quickly. We've already had the issue of a missile accidentally going into Poland, and it was a Ukrainian missile, but it was initially thought to be a Russian missile, and that could have been a very dicey situation. So the bifurcation that I talk about, I would say it's along these terms. I would say that this is the best case scenario. This is the best case scenario in which countries are able to basically leave each other alone, and this is a purely economic analysis of the situation. If there is a war, between God forbid it would be between the BRICS countries and the United States and its Western allies, that would completely change the entire situation, right? And of course, I think most people, if that were to happen, could very much end up dead. But regardless, provided you don't have that very extreme case situation going on, I do think the bifurcation is kind of a baseline scenario from which to operate on, and things are trending in that direction on the economic front. The second question, I believe, was about the internal politics of the United States and whether the US is well poised to deal with this growing economic threat from the BRICS countries. Frankly, I don't think that this is high on the agenda of the Western powers currently. Or if it is, I don't think that they are responding to it in a way that is particularly intelligent. I do think that, and this is just, again, this is not me, this is just listening to people who have knowledge of the geopolitical situation. I think if you look at the leaders in the BRICS countries and you compare and contrast them with the leaders in Western countries right now, you will find that the BRICS countries like India and like Russia and China have much more competent leadership than Western countries, and much more competent advisors. It kind of all ties into the fact that the West is on a kind of secular economic and political and social decline, and a demographic decline as well. It's all tied into that. Yeah, so I'm not really sure about that. I don't think, at least from my observations, that they are taking this very seriously. I think it's still, actually, to be honest, they aren't, and I'll tell you why. There was a Financial Times article and there was a Bloomberg article saying that it was actually published just over the past year. It was about the global monetary bifurcation, and it was saying that this won't happen. This will never happen. This is not going to happen. It's going to be very difficult for the BRICS to do this. And so if you can read the article, it's published somewhere. And if you do read the article and you agree with me, I think you'll find that it's missing some of the key details that I bring up in this presentation. So that's what I think. I think there's maybe a willful ignorance on the part of these countries. I do see another question on the chat.
Yes.
Professor.
Yes, they've got a question, and you said Saudi Arabia is under the support of US for armed support for armed force, and if Saudi Arabia wants to choose BRICS, then what will be the state support they get from US?
So this is something I did look into a little bit, because it is true that right now you could say if the Saudis decide that they're not going to accept dollars, what's going to happen to US military support? I don't think that the Saudis are very confident in the United States anymore, especially after they saw some weakness with regards to the US withdrawal in Afghanistan. That's a geopolitical thing, of course, but if you go back a few years, Russia and Saudi Arabia signed a joint defense agreement. And so the Saudis are obviously looking at other countries as potential military allies aside from the United States. Turkey, for its part, and Turkey is another potential applicant to the BRICS countries, Turkey maintains very good relations with Russia, despite the fact that Turkey is a NATO ally. So Turkey is playing a kind of a game in which they're putting two sides against each other. And I believe that the Saudis are also playing the same game. I noticed that Prince Mohammed bin Salman, who's essentially the de facto leader in Saudi Arabia right now, invited the Chinese last year to Saudi Arabia to discuss economics and to discuss the potential for a yuan currency. And it could be very well that we'll also see Saudi Arabia, if they join the BRICS, requesting military aid in return for oil. It could be that happens. So I see that trending in that direction. So that's what I would say to that.
Thank you. Thank you, Professor Cornelius. Father, shall we end the session?
Cornelius, do you think this IMF is playing still a vital role in this economic development and economic? So, because that is a very important body, which plays a vital role. Be the decision making, all those things. No, I'm just requesting you to reflect a minute on that, and why don't you share?
Yes. Yes, I agree with you. The IMF is extremely important. However, the IMF, I believe, is used as a geopolitical tool in some respects, because quite often you will find Western countries, whether the IMF likes it or not, exploiting the IMF's and the IMF's loan mechanisms for developing countries in a way so that Western interests, shall we say, can gain control over Eastern resources. This has happened time again in Africa. It might have happened in India too, although I'm not sure about the history. But a competitor is emerging, I think, to the IMF, and that is, although it's still in its early stages, China's Belt and Road Initiative. The Belt and Road Initiative is essentially a competitor to the IMF, because the economic model behind both, as far as I can see, is giving aid and giving loans to developing countries and using that as a political lever to gain control over those countries' natural resource wealth. And the Chinese are doing this in Africa very successfully. They might even be doing it in Sri Lanka to some extent, according to what I've read. So yeah, the IMF, I do see that as an important body, basically acting on the behest of Western economic interests, because after all, the Bretton Woods was a Western origin monetary system, right? And the IMF grew from that Western origin monetary system. So, but I see the power of that diminishing as China's Belt and Road Initiative declines. And if the BRICS adopt a gold-backed reserve currency, I think it'll compete very favorably against the IMF's special drawing rights mechanism, for example.
Yeah, that's good. Yeah, thank you.
Thank you.
Yeah.
Thank you. Thank you, Professor Cornelius, for extending your valuable time for our students, and you have given an highly informative presentation for our students. Thank you very much for spending your valuable time with us in this international webinar.
Maybe, Madam, so Cornelius was talking about 2030, how this system is going to be, and now. So what will be your response to the sustainability of each country with regard to this economic development? Because now we talk about, widely we talk about the sustainability, right? Even at education level, we talk about sustainability. How do you see the sustainability in the economic development in
as an environmental
yeah.
Okay. So it'll play a role for the Western countries, I think. The Western countries, as far as I can see, I do think they care about environmental sustainability to an extent, but I also think it is a geopolitical play to divest themselves from Saudi Arabian and Middle Eastern resources because they can see the writing is on the wall, so to speak. I don't think that sustainability initiatives will become a big factor in the BRICS countries because the BRICS look at the West and they say, look, you guys developed using fossil fuels. Why can't we develop using fossil fuels? Why are you imposing these conditions on us? Let us develop to a point that you are, and then we can talk about sustainability. So I don't see Russia really caring that much, or China for that matter, about these sustainability issues. India, I do think will to some extent, and I do think that there's a movement even within India to address environmental factors, and South Africa and Brazil too. But if China and Russia, won't go along, and there might be merits to that argument from their perspective anyway, that they need to use fossil fuels to grow, then it becomes a kind of prisoner's dilemma game between the BRICS countries and the Western bloc, shall we say? Yeah, but it's a good question. Yeah, thank you.
Thank you. Yeah, madam, over to you, madam.
Thank you, Father, for the valuable questions that you have put forth to Professor Cornelius. Now it's time to thank Professor Cornelius once again. And on behalf of our Father Director, Rev.Dr.A.Michael John, and our Father Administrator, Rev. Dr. John Bosco, he is here amidst us. He has joined now. Yes. On behalf of our students of MBA and of members of faculty, I thank you for extending your valuable time to us and for the valuable presentation. Thank you very much, Professor Cornelius.
Thank you so much. It's been a real honor for me to talk to you all. I really appreciate it. Thank you.
Thank you.
Thank you.
Thank you so much.
So good night, Cornelius.
Thank you.
Yeah. Thank you.
All right. God bless you.
Thank you.
Yeah.
Thank you.
Bye.